Okay, welcome back, ladies and gentlemen, to Ticker Time News. I am Adam. Thank you for joining me. Oh, it was a rough day in the market. Boy, oh boy, did it just drop out and fall. We made a new yearly low, a new low for the year today on the S&P 500. And even the Dow Jones made a new low for the year, something that we thought was fishy back here on May the 2nd. When the S&P 500 made its new low for the year and the Dow didn't. So we were expecting, well, something's not right here. There's more falling to come. There's more lows to be made, and we did it today. Now, on Friday, we talked about this, and we talked about this during the live stream, that the market could continue falling. And obviously, we were hoping for something better than what occurred, but this is what we got. All right, this is the quick take on the markets today. So I'm going to do a quick take on the markets, and then at the end, take your questions. So if you do have a question, and the questions really are the most important part of this live stream, your questions and getting your questions answered. So if you have a question, leave the ticker symbol and your question in the comments, and we'll go over it during the show. So I'll do the quick take in the beginning, so that way anyone who is just interested in the quick take, there you go, you have it, and then your questions will follow. We're talking about Upstart today, their earnings, talking about Palantir, their earnings. They dropped hard. RIVN even fell today off of some news from yesterday that Ford is considering, along with another unnamed investor, to sell millions of shares of RIVN. So RIVN tanked today off of that news. And yeah, but there was a bright spot. There was a bright spot. AMC came to the rescue. And last time I checked, it was up during the after hours. So they came in with good earnings, and that's looking actually pretty good. So there were a handful of bright spots in the market, but not very many. All right, so let's jump into this where you get your questions ready. We'll go. Here's the quick take on the market. The S&P 500, it fell 3.2% on Monday, closing below the 4,000 level. Now, this is the first time in more than 13 months that the S&P 500 has been below this 4,000 level. And if we trace this back, this is the bottom blue line right here. That's sitting right about 4,000. We have to go all the way back here to April of 2021 when the market popped above 4,000 for the first time ever. And now we're back down to April of 21 levels on the S&P 500. It's just, wow. And again, remember, my mark here for the S&P 500, I mean, it can go lower than what I'm aiming for here. But I'm aiming for this yellow box down here on the bottom right side, this yellow box here. This would be a 20% discount from the high hit on January the 4th on the S&P 500. And that number is sitting right around 3760. 3760 on the S&P 500. I mean, we closed at 3991, so in all likelihood, it's not that far off. And if we did get this low, that would also fit this purple trend line that's descending right here, where we had the first low, the big low of the year, and that was hit right here on January the 24th. Fast forward 1 month to here on February the 24th, and that was the second low of the year, right? And then today is our third. Well, actually, we actually hit a new low on what was this, the third or second? May the 2nd was a new low, but then today is the fourth new low made this year. And if we continue on this path, we'll line up with the first two, January 24th, February 24th, And then we'll get down here. Maybe I would hate to say May 24th, but it's looking like a possibility, especially in the direction we're going and at the speed at which we are going. But maybe the 1st of June, May 31st, or June 1st, maybe. That's where the purple line first touches this yellow box. So keep that in mind too. And I really hate to say it, but May the 24th actually does clip this purple line and yellow box in the corner right here. So, man, that would be a coincidence, wouldn't it? All right, let's keep going on. This was a broad-based retreat led by growth stocks. Growth stocks took the biggest hit today. And let's look at the Nasdaq, because that's the next one that I want to mention here. The Nasdaq sank today hard. It dropped 4.3% to close today, up a little bit to settle right there around 3.98% is where it ended up settling. This new low hit today actually now brings the purple line here that we were shooting for breaking. Well, we broke it. We tapped it on Friday, and then, of course, we sank below it today. So if I want to grab that line and now bring it down to today, this is what it looks like now on the Nasdaq. So the Nasdaq, it closed right there at that 12,000 level for the first time since November of 2020. But it kind of settled a little bit back above that 12,000 mark by 187 points. So 12,187 points is where it settled for the day. And now we've got to drop this this line down here. Are we going to make a new low on this? I do believe so. And quite frankly, here on the chart, I can take this, clone this circle. These are our lows of the day circles. Plop it right there, and now we've got another new low here for the day. And I should pop one over here and see where does that trend line actually take us? If we were to draw a path and connect this up here, it doesn't quite connect. It's a little too high because it then sets the dip that we had here on February the 24th a tad bit below that, sitting right about that 13,000 level right there. So yeah, so we have that now. Okay, moving on. The Russell 2000, and I'll pull that chart up here too so we can look at it. Again, this is the daily chart for all of these. You know, small caps have taken a real beating, but if you look at this, the small caps traded sideways here from January the 20th all the way through before breaking below this to April 22nd. So not too bad for small caps, but the falling over the past 3 sessions have been heavy. Now, the Russell 2000, it slid 4.2% today. It's just continuing to fall. And I mean, just like the Nasdaq, the last time we were at this level on the Russell would be November of 2020. That's a long time ago to get back to this level. Now, the Dow Jones, that's the one that had us thinking that there could be a new low. Here's the Dow Jones, right? And we had this marked off. This purple line this can come out now. It's not doing anything for us. But here on May the 2nd, when all the other indices made a new low for the year, the Dow didn't, which left me pondering, well, there's got to be a new low coming soon for the Dow, and today was the day. We had the new low for the Dow, and yeah, the Dow Jones set a new low for the year, declining 2% today. So it actually, in the relative scheme of things, the Dow Jones outperformed. It wasn't the biggest loser for the day. It settled at down 1.99% for the day. So there's what that is. Now, back to this overall market and what's going on here. The persistently weak price action, while not quite panicky today, I guess you could make an argument that it was. I mean, it dropped 3.2%, the S&P 500 did, and set a new low for the year. But it remained, I guess I could say, a hindrance to risk sentiment at a time when the market has been contending with growth concerns. We've been talking about for a while. The second half of the year will be worse than the first half of the year. The economy is contracting. Growth is slowing. And these growth fears come from rising interest rates, Russia's war in Ukraine, China's COVID-related lockdowns, which, according to Bloomberg, caused Saudi Arabia to actually cut oil prices for Asian buyers due to weak demand from the lockdowns in China. Now, 10 of the 11 S&P 500 sectors did close lower. One made it out with green today. Could you guess which one? Okay. The selling interest accelerated in the last 45 minutes of action today. If we look at the 5-minute chart, and I'll tell you which one closed in the green today. This is the 5-minute chart here, okay? This is for today. And you can see a gap down this morning over here above my head, the gap down this morning. And then we had a couple little rallies throughout the day, but it was an overwhelming move to the downside. And then the last 45 minutes, we get to 3:15 Eastern, and then it's red, 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 a little green, red, 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 a little green. And we close in the red. So a lot of the fall happened first thing this morning with the gap down, and then the last 45 minutes of the day. The energy sector was down 8.3% and was the worst performer, as weaker oil prices, which were down 6% to $103 a barrel, they were at $110 a barrel on Friday when we closed, contributed to some profit-taking activity in the space, because energy has been a big gainer on the year. And you want to lock in those profits when you can. Now, the biggest drags on the market, though, were information technology down 3.9% and consumer discretionary down 4.3%. The consumer staples sector, which was up 0.1%, was the only sector to eke out a gain. Did you get it right? Consumer staples. That was the sector that had 0.1% gain on the day. Not much of a gain. Believe me, that's not much. But it was green. Growth stocks continued to be loss leaders, evident by the 4.4% decline in the Vanguard Mega Cap Growth ETF. Now, we use this one a lot to track how growth is doing versus the overall stock market. I'm putting it back on the daily here, and I'm going to type in the ticker for the Vanguard Mega Cap Growth ETF, ticker symbol MGK. MGK. Now remember, you can do this at home too. There's a link in the description of this video for a free account to TradingView. Now, when you click on it, it takes you to their paid plans, but you can sign up for a free account there too. If you happen to sign up for a paid account, then you can get a $30 credit in TradingView coins. All right, ticker symbol MGK for the Vanguard Mega Cap Growth ETF. Mega Cap Growth ETF. All right, you can see it. Let's take these squiggly lines off of here. These were when we were talking about this earlier. Where could this possibly be going? And we gave two scenarios. And it looks like our scenario B of further falling is where we're going. Okay, so we're comparing this, and it's got itself a nice little trading channel here, as you can see. Let's take that away. All right, volume spiked on this ETF today. All right, this is a daily view, right? And you get little spikes, but most of them aren't that incredibly tall. Like, for example, volume here on this spike, which is probably the average spike, is about 680,000. But then we get to Friday session and today, and we get to 1 million, right? 1 million. So we were looking maybe 543. There's one, 738. These are the tops of the spikes on average, 348, 641, 140,000. Those are the spikes. But we get 1 million on the volume. So there were a lot of people cashing out of this one, right? Now, for comparison, so you can see how bad growth did. We compare this 4.3% drop in the Vanguard Mega Cap Growth ETF, and then we look at the Invesco S&P 500 Equal Weight ETF. So it's taking all 500 stocks in the S&P 500, giving them an equal weight. For example, in this, the Vanguard Mega Cap Growth ETF, it's big cap growth companies, and it doesn't matter what the market cap is. You could have one with $1 trillion market cap, one with $100 million market cap, and they're going to move. If they move both 1%, well, the one with $1 trillion is moving a lot more than the one with 100 million, right? So equal weight is putting a cap, basically, all of them are the same. The the ticker symbol for the Invesco S&P 500 Equal Weight ETF is RSP. RSP. Remember, 4.3%. This was down 2.9%. So not quite as bad as growth. Still a big fall for an equal weight basket, right? So it falling practically 3%, which is still a huge decline, like I said, in its own right, was better off than the Mega Cap Growth ETF. So growth stocks were hit hard. Now, looking at some individual stocks, Uber, UBER, company name and ticker symbol. Uber in particular, it fell nearly 12%, 11.58, and it's up 1.87 in the after hours. All right, let's I'm going to remove volume here. It makes it a little easier to see these candles that are going so deep, falling so far. You can see this. It is, the RSI is oversold. It's down right now to a 24.6. Money flow is also oversold, down to a 14.9. And you can see this green bar here at the bottom. That's actually flashing a buy signal for Uber. Now, these signals typically work out pretty well, but they don't always work out, because there can be more room to fall. But usually when you get this low, the last time Uber was this low on the money flow. My gosh, how far do we have to go back? How far do we have to go back? It looks like we have to go all the way back here to May 11th or May 12th of 2021. And that's when we got the first buy signal. And you can see that it doesn't always work out, because in the short term here, it did work out. If you would have bought here and then just sold after a 20% gain right here, then you made yourself a nice 20% gain. But if you were to have held that, waiting for the sell signal didn't pop until here, which actually would have put you into the green, but only by 1%. So this is an example of showing you how, even though they give off these buy and sell alerts down here, or they trigger a buy signal or trigger a sell signal, they don't always work out perfectly. However, if you put your own rules into it on how you want to trade these, after it peaks, after a 20% gain there, let's line this back up right. And here we go. After a 20% gain, then that's beautiful. You just made a nice 20% gain. And here's another example of where it doesn't exactly always work out. If you would have bought here, you could have ridden this for a 6.6% gain and then sell once it cuts out. Oops, let me get that. Sell once you reach, a target that you feel comfortable with. But if you would have bought here and then waited for that sell signal, which occurred here, you would have ended up at a loss of 3%. So even though this is helpful, it's just like any other indicator that you're going to use. You want to use it with other indicators, with other signals, okay? And this is just a tip for new investors who are diving in to TradingView, or they're starting to look at different indicators and charts. You don't want to stick with just one indicator and use that solely. You need a combination of indicators to make sure that you're following what your trading style is, your trading goals are, or even your investing goals, right? So just a little side note there, a little quick tip, because it did flash a buy signal here with money flows dropping to a 14.9. That is a deep one there. Money has just come out of Uber. But the reason I'm talking about Uber in this 12% drop, sorry about the side note there, but that was for new investors. Uber dropped 12% after CNBC reported that the company was planning to cut costs. And this exacerbated the underlying growth concerns in the market. If Uber is cutting its costs, then it must see something on the horizon that says, wait a minute, we're going to slow down a bit. The economy is slowing. We're not going to be able to have as many bookings as we have in, I don't know, pre-COVID 2019, or maybe thus far in 2022. The second half of the year is not looking so bright. Now, in addition to Uber, we have Palantir, all right? Ticker symbol PLTR for Palantir. This is a company I like. I've traded this company. I bought this company when it did its direct listing, which is different from an IPO. But it listed for about $10 a share. And that's right about where I got in, $10 a share. I held it for a while, eventually selling it, but it's now back under where it was when it DPO'd, and that wasn't that long ago. When was this? September 30th? September 30th of 2020. And now it fell. Why did it fall? Well, let's look at earnings. A 44% surprise loss in earnings. It reported 2 cents a share. It was estimated to be at 4 cents a share. Revenue came in at 446.3 million. Well, estimates were 443.4 million. So revenue flat, right? 2.9 million surprise there, or 0.6%. That's flat for revenue. EPS is where it really sank there for them. But it wasn't just this. Palantir dropped 21% and additional 2.2% now in after hours. So it's getting close to 24% today. That's a big drop. And it dropped on disappointing revenue guidance. Because remember, there's two very important things whenever an earnings report is published. It's the EPS and revenue, right? The actual earnings for the quarter, and then the guidance. And they're both equally as important. Equally as important. One is telling you how the company has done in the prior 3 months, and the other, the guidance, is telling you how the company is expected to do in the next 3 months. And even revenue and earnings can be projected for the entirety of the year. So they're both equally as important. One is looking in the rear view mirror and one is looking straight ahead. So their revenue guidance wasn't very good. And that's caused a 24% drop. Now, another company who I talked about briefly, RIVN. Let's look at the stock chart. RIVN is the ticker symbol for RIVN. They also dropped 21% last I checked, 20.88%, and flat in the after hours. Now, they have earnings in 2 days. Earnings in 2 days. Their expected EPS is a loss of $1.04 a share on revenue of $132.6 million. Now, why did Rivian all of a sudden drop 20%? It's about news that was reported that Ford, ticker symbol F, who was down nearly 6% today on their own, and another large unknown seller are planning to unload millions of shares of Rivian, according to a CNBC article. Now, Ford's earnings report showed some losses that were mainly due to the loss suffered by Rivian. Because remember, Ford is a big investor in Rivian. And this is the daily chart showing you how they have been since becoming a public company, which November 10th, 2021 is when they became a publicly traded company. And yeah, there was some euphoria. The stock price went up to a high of $179. Now, there were a lot of Coinbase investors who didn't want to get caught up like Coinbase did on its IPO. So this was a real quick run up and a real quick fall. Luckily, it didn't all happen on the same day, but it did have a pretty big move when it went public. It opened at $106 a share, ran up to $120 a share, and then closed at $100 a share. So it moved. But it's been sinking ever since. And back when the company first became public and how the environment that we were in back in November and December of 2021, thinking that getting Rivian sub 100 was a good idea, yeah, things change, and your investment thesis also change as the environment evolves. That's an important note for new investors. When you have an investment thesis, whether on a particular company or a group of companies, a sector, an ETF, whatever it may be, that thesis, that needs to change. It needs to evolve as market conditions change, as the company reports earnings and reports on guidance. Are they good? Are they bad? You have to evolve with it. And now here's Rivian sitting at $22.80 a share. Okay, another company that I want to talk about right quick that people love. And this company has been on a wild ride, and that's Upstart. Ticker symbol is UPST. Now, Upstart is one that shot up quick, right? This is one that kind of came out of nowhere and boom, and you can see its short life as a publicly traded company. Let's see here. It went on the market December 16th of 2020. It opened at $26 a share. And it went on a big run after earnings in August of 21 that just sent the stock to the moon. It ran all the way up to $389 a share. $389 from its opening of $26. That's an incredible run. But as fast as they go up, they go back down. And that happened with Upstart. Now, Upstart reported earnings after hours today. So this is what's caused a major meltdown. Upstart fell 8% during regular session. Okay. That was mainly due to all the growth concerns that I've mentioned already. So growth stocks got hit hard because of that. And then people dumping it before its earnings report came out. And now it's dropped 43% in the after hours. I have to adjust this chart because where it is right now is nowhere to be found. So once I adjust the chart, you can see right here is where they are trading right now. Okay, this red circle, that's where they're trading. That's a 43% drop from their closing price today. Now, they reported Q1 earnings with an EPS of 61 cents per share, and that did beat by 8 cents. They had revenue of $310.1 million, which was, and this is awesome, a 155.6% year-over-year gain. So definitely a growth company when you're growing over 150%. And that did beat by $10 million. Upstart's bank partners originated 465,537 loans, totaling $4.5 billion across Upstart's platform in the first quarter. And that was up 174% from the same quarter a year ago. Now, Upstart provides an AI-driven lending platform. Now, these numbers so far, they sound great. So what's the problem? Why did it drop 43.6% in the after hours after these numbers were reported? What caused this stock to crash? Well, I can sum it up. Q2 guidance. Remember what I mentioned earlier. You have your earnings, EPS and revenue, and then you have your guidance. One is looking in the rear view, looking back 3 months. One is looking ahead by 3 months. And we're already in month 1 of the next 3 months. So they have kind of a read on where things are going. Consider that too. Now, Upstart's Q2 guidance has revenue somewhere around $295 to $305 million. They just did $310 million, remember? And that was a 155% gain from last year. Well, the expectation for Q2, the expectation is $335 million. So they're coming in under what analysts expect. That means they're slowing down. And since they just did over $300 million, coming in with numbers, you want to cut it down the middle, call it $300 million, they're doing less. They have less revenue expected to come in. And remember, they're already in the next quarter right now. So they have a better idea of where things are going to fall. Now, net income is expected to be a loss of $4 million to the break-even line of $0. An adjusted EBITDA of $32 million to $34 million. Now, the adjusted EBITDA margin at about 15% is down from the reported 20% that Upstart itself did in Q1. So remember in the video that I did over the weekend, and we talked about adjusted EBITDA and how that's a different way to look at a company's profitability, especially if they don't provide any sort of other profitability data points to look at. This is a good one to look at to judge whether a company is profitable or not. Adjusted EBITDA, 5% less than what was just reported. And then if we go to the fiscal year 22 outlook, they're projecting revenue at about $1.25 billion. Now, the expectation was $1.4 billion. So they're even cutting it shy on their yearly revenue. So that's why Upstart has dropped 43.6% in the after hours. It's their guidance. Now, let's talk about a happy one, right? Something that actually did good in the market today. That's AMC Entertainment. Ticker symbol is AMC. You may know this one. It's been in the news a lot. This one is a roller coaster ride for sure. Oh, let me adjust the chart here. Definitely has been a roller coaster ride. I mean, just look at that. Okay, so they are up 2.96% in the after hours. They did drop 9% during regular session, so they weren't able to make that back. But earlier, they were up around 6% in the after hours, so some of that profit was being taken. But they reported earnings that weren't half bad. They had Q1 earnings with EPS at a loss of 52 cents a share, and that beat by 11 cents right here on the screen. And that was a 16.8% surprise. They had revenue of 798.4 million. The estimate was 743.4 million. That was a $54.9 million upside, or 7.3% upside on revenue. And that revenue actually grew by 429% year over year. People are going back to the movies. Now, shares lifted off for AMC after their first quarter earnings showed revenue rebounded even more sharply or faster than expected. And the company heavily cut losses as its business sought to return to normal from the COVID-19 pandemic. So AMC, it seems to be on the right track. Now, away from equities for just a moment, and let's talk about the Treasury market today, because the bond market is very important for the story, right? The Treasury market attracted some buying interest amid the carnage in stocks. Let's look at the 10-year first. US10Y on TradingView. You can take a peek at the 10-year this way. And here we have the 10-year. It's been rising. Now, the 10-year yield, which hit 3.2% overnight, back down to 3.05% by the closing bell, down 4 basis points on the day. Right now, it's at 3.034%, down fractionally there. Now, the 2-year, we can look at that by going to US0 to Y. You have to remember that 0. That takes you to the 2-year yield. It declined 6 basis points to 2.6%. And it hit 2.73% overnight. So there's the bond market, the 10 and the 2. Crypto has also been struggling, okay? Let's look at Bitcoin right quick. It's been falling pretty hard. It fell right through the low that was made back here, which was like a reversal moment for Bitcoin. Back here on January the 22nd, this was a turnaround point for Bitcoin. It was the new low for the year, but Bitcoin turned around and started rallying after that. But that rally peaked on March the 29th. And over the weekend and over the past several days, Bitcoin has been accelerating its losses. If we go back here and look at Bitcoin for just a moment here, this bottom blue line right here is sitting right about 30,000 for Bitcoin. The last time Bitcoin was at this point was a reversal moment, and that was back here on July the 21st and July 20th. Bitcoin hit a low of 29,301 and 29,501. But that was a turnaround moment. That was a low that bounced off a support line and reversed and got a big rally, a rally so high that it got a new all-time high. But I don't think we are at a point right now on Bitcoin where we could say this is a turnaround moment like we got in January of this year and like we got of July of last year. I think we can see more lows. Now, Bitcoin today, it did bounce off of a low of 30,311. It's at 31,098 right now. So not quite that low, but heading in that direction. And then if we look at Ethereum, Ethereum fell just as hard as Bitcoin today. And again, just like Bitcoin, Ethereum had a turnaround moment here, January the 25th, where it hit a new yearly low and turned around. But the thing about that, and the thing that's slightly different from Bitcoin, is Ethereum did not make a new low today. Its low for the year is still January the 24th of 2159, and it's at 2301 right now. And the low for the day for Ethereum was 2222. So it did not set a new low. That's interesting. Is a new low incoming? Don't know. Okay, here's where we stand year to date, looking at all of our different indices. I'll put the S&P 500 back on here. And again, you can see it. We've got this all set up. This is where I think it's going. Can we get a rebound rally this week? Yes, we can. Can we get a rebound tomorrow? Certainly, we could. But this week, what I would expect to see, I would expect to see a lot more selling pressure. I would also expect to see a couple of rebounds. But remember what I said, several live streams ago. Probably going back here to the middle of April. The beginning of the year, we would get these rallies. They wouldn't last, and they would fade away. They would pop up and then fade away because investors and traders were selling into strength. That's the type of thing we're going to get this week. If we have any rally whatsoever, people will be selling into strength. That means that rally will not last. That would be my prediction for this week. Okay, here's where we stand year to date. The Dow Jones is down 11.3% year to date. The S&P 500 is down 16.3% year to date. Both of them are technically in correction territory, being down that low. Now, the Russell 2000 and Nasdaq, they're in different territories. The Russell 2000 is down 21.5% year to date. The Nasdaq is down 25.7% year to date. Both of them are technically in bear markets. Once you are down 20% or more, that counts, technically speaking, as being in a bear market. Once you're down 10%, that's technically a correction. And that's where the Dow and the S&P find themselves. Down 10%, but not quite 20%. But I do expect the S&P 500 to get to that 20% and be technically in a bear market. We all can feel it. We're in a bear market now. We know it. We had one nice snapback rally, but it's been down ever since. And any green that we get is immediately met with red. Okay, that wraps up everything that I wanted to talk about today. I know it was a rough day in the market. Hopefully things, I can't say and be honest about it. I can't say, hopefully we'll have a green day tomorrow. I can't do that and be honest at the same time. That's just not real. Like I said, if we get a rally, there will be selling into strength, meaning those rallies won't last. And I would expect a rally this week, because once the market becomes oversold, then traders step in, they buy, push the markets up a bit, and then they sell into that strength, taking their profits. All right. Let me just say right quick here, the RSI for the S&P 500 is at a 37.9. It is not breaking below its local area of support for the RSI, for the relative strength index. It would need to get down to, let's see, this would be a, oh, I can't read it. There we go. It would need to get down to a, all right, it's at a 37.9. It would need to get down to a 33.1, and that's its kind of local low right now. If it breaks below that 33.1, then it's going further than it has been over the past several sessions. Now, on the money flow, it's at a 27, and we know that can go lower. That can get down to 20, and that occurred back here on September the 20th, 21st of 2021. That's how low that can get. So I don't expect it to any meaningful rallies this week. Again, if we get something that pops, they'll be selling into strength. All right. Watch for videos on Uber and the news that came out about them and what it means for the company. And I've got one coming up for Palantir as well as standalone videos. So watch for those. Make sure you're subscribed so you get those. And if you could help us out, and this would be greatly appreciated, if you could smash that like button. That lets YouTube know that you thought this video was helpful. Take the URL, share it wherever you can. That lets other people know that you thought this video was helpful. And then click the first link in the description and join us over there in Beating This Market. Tons of information that is provided over there for you, whether you're a trader or an investor, and it helps out the channel greatly. So I appreciate all of our members over there. Look for updates to come. And I guess we'll wrap it up here for today. Thank you so much for joining me. And remember, if you are watching the replay of this, leave a ticker symbol in your question in the comments. We'll go over it live during tomorrow's show. Or if we need to, we can make a standalone video about it if enough people are requesting it. Okay, thank you, ladies and gentlemen, so much for joining me today. I greatly appreciate it. And I'll see you in the next video.